Welcome back to Lunch of the Market. I hope your Halloween was a happy one, filled with lots of friends and candy. Just don't eat all that candy in one day. You may even want to schedule an appointment with your dentist to come up with a game plan for damage control and all that sugar. Speaking of scary things, take a look at the stocks getting pounded today. Salesforce.com, Netflix, Banco Santander, and Banco Balboa are getting rocked today. For the Spanish banks, we actually like STD and BBVA, both long here at these levels. BBVA trades with a single-digit PE of 9.38 with a 3.8% dividend and is $4 away from its 52-week low and $7 away from the high. The stock is down over 4% today on no news that we can find. The forward PE of the bank is 6.61, so we see no reason right now with the amazing amount of cash on their balance sheet, $129 billion, to give up on this name just yet. Banco Santander is down just under 4% today. This stock offers you a 4.1% dividend on a PE of 8.68 with a forward PE of 6.8 and a PEG of 0.69. The company has $359 billion in cash on the balance sheet. We think that if you're underweight financials, BBVA and STD offer you an opportunity to own premier international bank franchises much cheaper today than you could get them last week, and both are extremely well capitalized and will trade much higher even if you only give them a 10 PE. Next, Netflix is off nearly $6 or a loss of over 3%. We like selling the November 150-145 put spreads for those who just want to take in some credit ahead of expiration. Next week, you're going to see the theta really start to kick in and you're running out of time to play the November expiration. Should be able to take in around 70 cents for the November 150-145 put spreads that expire in 19 days. That's $17.70 lower than Netflix is trading right now. Looking at CRM, that's Salesforce.com, the stock is off $2.50 for right above a 2% decline. We like the November 190 put spreads to sell them for $1. They'll give you $13.50 cushion until expiration. We will likely not sell anything else after today unless the market gives us something crazy, as this week should be all over the place in terms of price action. We like to see what the market gives us after this week, so we'll be back listening to conference calls and watching to see how this week's big events turn out before we make further decisions. We also like the risk reversal for rare element resources on the April 2011 expiration. You could sell the April 2011 7.5 put for $2 and then buy the $10 April 2011 call for around 10 to 15 cents, and essentially own the upside from here for free, and if not, you'll get the stock for a great price. If you see the rare earth stocks continue to lose money, you can look to get in lower on the 40% rule we have. Wait until you see the stocks lose about 40% of their value from the most recent highs and then buy. For rare earth, that's $8.40, which is actually above the 7.5 strike we're short, which is why we like that level so much. For Molly Corp, you're going to have to wait some more. 40% decline will not be hit until the stock hits $24, so at least wait until MCP breaks $30 before you take a serious look at it. The company's CEO can't seem to keep his story straight, telling CNBC there's a bubble in rare earth prices, and then telling Bloomberg TV that there is no bubble, 24 hours apart. We don't like that kind of lackadaisical doublespeak from the CEO of a company that we want to own. Thanks for joining us again today. Tomorrow should be super crazy day, so we'll see what the elections give us. We may not have a lunch at the market for you tomorrow unless we're able to get you something from the Houston airport as we head for California for the last trip of the year before the holidays start. We'll have something for you on Wednesday to be sure. Thanks for tuning in, and we'll see you tomorrow.